Hi, everyone. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are up today. Dow Jones is up 1.2%. NASDAQ is up 0.6%. S&P 500 is up 0.7%. Russell 2000 up 0.7%. We got some economic data that we're going to discuss later. Oil is flat at about $65 per barrel. Yields are pretty stable. The 30-year Treasury yield is now 4.80. 10-year is at 4.25. Looking at the heat map, Palantir is down 4%. NVIDIA is pushing higher to record highs, 1.5%. Uber is down 3%. There's some news there we're going to discuss later. Oil stocks are down a little bit. Everything else is high. Tesla is lower today. Wall Street indices hit fresh peaks on trade. Fed cut optimism. We're just going to read the summary today. Wall Street's main indices rose on Friday, driven by optimism about potential interest rate cuts and easing trade tensions. The S&P 500 and NASDAQ reached intraday record highs, with the NASDAQ on track to confirm a bull market. Investors are also hopeful about potential trade deals with major partners, including China, and are closely monitoring interest rate trajectories. Let's dig into the trade deal conversation. The U.S. says deal with Sausage for number one like on the YouTube. Thank you very much, Sausage, for letting me know. U.S. says deal with Beijing will expedite rare earth exports from China. The United States and China have resolved issues surrounding shipments of rare earth minerals and magnets to the U.S., Treasury Secretary Scott Bessent said on Friday, ironing out a dispute that stalled a deal reached in May. As part of its retaliation against new U.S. tariffs, China suspended exports of a wide range of critical minerals and magnets, depending supply chains central to automakers, aerospace manufacturers, and semiconductor companies and military contractors around the world. During U.S.-China trade talks in May in Geneva, Beijing committed to removing the measures imposed since April 2, but those critical materials were not moving as fast as agreed, Bessent said in an interview with Fox Business Network. So the U.S. put countermeasures in place. Quote, I am confident now that we has agreed the magnets will flow, Bessent said. Efforts to resolve the dispute, including a phone call between U.S. President Trump and Chinese President Xi Jinping, which led to teams from both sides meeting again in London as negotiators tried to end a trade war between the world's biggest economies. Trump said on Thursday the U.S. had signed a deal with China the previous day, but did not provide details. A White House official said the U.S. has reached agreement with China on how to expedite rare earth shipments to the U.S. The administration and China agreed to an additional understanding for a framework to implement the Geneva Agreement that involved expediting these shipments, the U.S. officials said on Thursday. China's Commerce Ministry said on Friday the two countries have confirmed details on the framework of implementing the Geneva Trade Talks consensus. It said China will not approve export applications or control items in accordance with the law. Will approve. All right, moving on to some of the economic data that came out today. The U.S. consumer spending falls unexpectedly in May. U.S. consumer spending unexpectedly fell in May as the boost from the preemptive buying of goods like motor vehicles ahead of tariffs faded, while monthly inflation increases remained moderate. Consumer spending, which accounts for more than two-thirds of economic activity, dropped 0.1% last month after an unrevised 0.2% gain in April, the Commerce Department's Bureau of Economic Analysis said on Friday. Economists polled by Reuters had forecast spending would edge up by 0.1%. So that's a 0.2% miss. President Trump's sweeping tariffs, which have led businesses and households to front-run imports and good purchases to avoid higher prices from duties, have muddied the economic picture. Economists warned it could take time for the tariff-related distortions to wash out of the data, as we've been discussing as well. A record goods trade deficit in the first quarter, thanks to a deluge of imports, accounts for much of the 0.5% annualized rate of decline in GDP during that period. Consumer spending also nearly braked last quarter after being propelled by households pulling forward goods purchases. Households also spent less on services last quarter, helping to restrain growth in consumer spending to only a 0.5% pace, the slowest rate since the second quarter of 2020. The data potentially puts spending on a slow growth path in the second quarter. The combination of soft consumer spending and inflation is, however, unlikely to spur the Fed to resume cutting interest rates. So this is the critical part right here. The combination of soft consumer spending and inflation is, however, unlikely to spur the Fed to resume cutting interest rates in July. Fed Chair Powell told lawmakers this week that the U.S. central bank needed more time to gauge the impact of tariffs on prices before considering a rate cut. Economists argued that price increases have remained moderate because the businesses are still selling inventory accumulated before the tariffs went into effect. They expect inflation will start picking up, beginning with consumer price data for June. I agree. The PCE price index gained 0.1% in May, matching the rise in April. In the 12-month period through May, PCE increased 2.3% after climbing 2.2% in April. So that's an uptick on the headline. But more importantly, stripping out the volatile food and energy components, the PCE price index, core PCE, increased 0.2% last month. That followed a 0.1% rise in the so-called core PCE inflation in April. So this is the most important part. In the 12 months through April, core inflation advanced 2.7% after rising 2.6% in April. So that's not close to 2%, and it's also increasing. The Fed tracks the PCE measures for its 2% inflation target. The central bank last week left its benchmark overnight interest rate in the 4.25, 4.50 range, where it has been since December. Moving on to another measure of inflation, Cleveland Fed's calculation of the Fed PCE inflation rate for May was 0.22%, which analyzes to 2.6%. This was the lowest since July 2024, but the 12-month reading was 3%. Little change from recent months. So you can see here that the inflation has stalled out a little bit at 3%, which is much higher than the 2% inflation target and higher than any point in 2018, 19, 2020, and most of 2021. All right, now moving on to Tesla automotive news. Toyota RAV4 topples Tesla Model Y as the world's best-selling car. So this is interesting because a lot of people have been repeating rhetoric that the Model Y is the best-selling car, but I think this is for 2024. So that wasn't even true. But even Elon said this. So I guess it wasn't true. I think in 2023 and 2022, RAV4, especially the hybrid versions, were limited in sales. And Toyota dealerships were kind of known for not trying to take advantage of not increasing prices, not trying to take advantage of the supply shortages as other automakers. So I think it kind of took some time for RAV4 supply to catch up to demand, and that happened in 2024. So now, with ample supply, RAV4 outpaced Model Y sales in 2024, it seems. Toyota RAV4 has overtaken the Model Y as the world's best-selling car, according to new figures from Jado Dynamics automotive analyst Felipe Munoz. According to Mr. Munoz, the Toyota RAV4, the second best-selling vehicle in Australia last year behind Ford Ranger, outsold the Model Y globally by fewer than 3,000 cars. Mr. Munoz's figures put the RAV4 at the top, with 1.187 million sales globally in 2024, an increase of 11% on the previous year, ahead of the Model Y's 1.185 million sales, representing 3% sales drop. And now, again, this is 2024. And as we know, Q1 and Q2 2025 is very challenging for Tesla, especially Model Y, despite the refresh that's coming. So I think the gap will, and now we're going to talk about the Chinese competition coming in a little bit. With all that coming, I think Model Y sales have peaked. And they're going to drop. I think they're going to decline pretty quickly. It's a reverse of the last year's order, which saw the Model Y on top with 1.223 million sales and RAV4 second on 1.075 million. All right, now let's switch to the Chinese competition. The YU7 is taking the world by storm. There's a lot of incredible indications. So let's dig into this. Xiaomi launches YU7, undercutting Tesla's Model Y on price. Chinese EV smartphone maker Xiaomi on Thursday priced its new electric YU7 SUV from $35,364, almost 4% below Tesla's Model Y, stepping up the challenge to the US firm in the world's largest auto market. Now, the other thing is, I don't know if they're going to get into the specs here, but YU7 has 40% more range than the Model Y. So if I look at the cheapest trims of the YU7 standard and the Model Y rear-wheel drive in China, YU7 has 40% more, not 14, 40% more range than the Model Y for a cheaper price. And I think that right there is a deal breaker. But on top of that, YU7 has other things like air suspension, which only Model S and X has, and massage seats, which none of the Teslas have. 2x charging speed because of its 800-volt architecture. So all of these things combined kind of makes you wonder, why would anyone buy the Model Y? YU7's base model costs 10,000 yuan less than the selling price of the Tesla Model Y in China, with more premium models, YU7 Pro and Max, priced at these prices respectively. Xiaomi started taking orders for all three models on Thursday night, with orders hitting 200,000 in just 3 minutes after the sales started at 10 p.m. The Model Y, which was China's best-selling SUV in May. By the way, I've seen a lot of Tesla bulls dismissing this figure, 200,000 in 3 minutes, because Cybertruck had 1 million plus orders, etc., or reservations. But the difference is the Cybertruck ordering fee or the reservation fee was $100 and it was refundable, whereas Xiaomi YU7 has a $700 ordering fee and it's not refundable. So I would say this is pretty representative of the demand that this vehicle is going to have. I mean, it's clear that Xiaomi YU7 is going to sell millions of units in the coming couple of years. The Model Y, which was China's best-selling SUV in May, starts from 263,500 yuan in China. Xiaomi said it will partner with BYD, GAC Toyota, and Zhengzhou's Nissan to build an ecosystem connecting humans, homes, and cars. Xiaomi's CEO and founder has said he wants the YU7 to challenge the Model Y, and analysts say it has potential to succeed. Other rivals include Zeekr's 7X and Li Auto's L6. The YU7 will serve as an early test of whether Xiaomi can broaden its appeal beyond early adopters and tech enthusiasts. YU7 has a driving range of 519 miles per charge compared to 719 kilometers. So 835 kilometers, 719 for the redesigned Model Y that was launched in May. I don't think these figures are correct. I'm going to look into this a little bit later. The YU7, Xiaomi's second car since the Beijing-based firm entered the auto sector last year with a sporty electric SU7 sedan, which drew styling cues from Porsche and was priced below Tesla's Model 3. Since December, the SU7 has outsold the Tesla Model 3 in China on a monthly basis. So SU7 caught up to Model 3 sales in China within 1 year, and the gap between YU7 and Model Y is actually even bigger than the SU7 versus the Model 3. So I think that's going to happen even quicker. And I suspect that throughout Q3, we're going to start seeing the demand drop in Model Y in China. The SU7's success expedites the company's EV bid despite intense competition in China auto market. In March, Xiaomi raised its target for EV deliveries this year to 350,000 from an earlier guidance of 300,000. The company has, when was the last time Tesla increased its guidance? The company has secured a plot of land in Beijing, close to its existing car factory, for 88 million, which it plans to use a smart connected car and components project. Li said in June that he expected Xiaomi's auto business to become profitable in the second half of this year. Okay, now Xiaomi YU7 production capacity sold for the next year. It's not unexpected. Incredible car, incredible demand. It will be challenging for Xiaomi to balance the production of the YU7 SUV and SU7 sedan to meet demand. In the first week of June, the SU7 insurance registrations hit the second lowest point in 2025. The lowest was only during Chinese New Year, when the market was essentially closed, despite the EV market being in growth. Additionally, SU7 waiting time has extended significantly as Xiaomi manages plant resources between YU7 and SU7. The Xiaomi app indicates a waiting time of 47 to 50 weeks, nearly a year, for the SU7 Pro, and a shorter delivery time for the standard version, which is a 41 to 44-week waiting time. So even with this incredible waiting time, up to a year, the SU7 is outselling the Model 3. So just imagine what's going to happen when the supply catches up with demand. Moreover, Xiaomi is dealing with scalpers who sell the lock-in prior to orders. I would not really care about that. The hope for Xiaomi lies in the third phase of its factory, as the company has acquired 485,000 square meters of land near its current plant, as disclosed by the Beijing municipality last week. No more information about F3 is available. Xiaomi previously stated that the combined plant output will be 300,000 units, which each phase introduces 150,000. However, looking at SU7 sales this year, the company has already delivered 132,467 units January to May. It might suggest that the 150,000 annual output is meant only for the one shift only. Still, it will take Xiaomi about a year to satisfy all 240,000 locked-in orders it got in the last 18 hours. The Xiaomi SU7, it took a year to deliver the first 200,000 units. All right. Now, moving on to the other competition that's coming. So that's not the only thing. The YU7 is not the only one. In the next few weeks, there's tremendous competition coming, each vehicle more impressive than the other in China. So that's why I think Tesla China is in an extremely challenging position. Now, let's not forget that Tesla China already doesn't make money. And that's with factory working at full capacity. So what's going to happen when the capacity utilization declines? The Tesla Model Y was the best-selling car in China last year, selling 480,000 units. Unlike the Model 3 sedan, Y SUV sales held well against Chinese EV competition. However, despite launching an updated version in January this year, sales are down 24% so far this year, and more competition is rising. 4 Chinese SUVs will be launched in the next 4 weeks to compete with the US automaker's SUV. Starting this week, on June 26th, the most serious Model Y challenger will hit the Chinese market, the Xiaomi YU7. Li Jun, CEO, is not holding back and publicly compares YU7 with Model Y, claiming it has much better specs, and that's true. YU7 is nearly 5 meters long with a 3-meter wheelbase and a 23 kilograms curb weight. It will have a 760 kilometer CLTC range or up to 508 kilowatt motor power. It will feature 800 volt charging. I mean, this is Tesla was supposed to be doing this, but it tried with Cybertruck, and Cybertruck sales just didn't pick up. So I don't know if Tesla has any plans to bring it to other vehicles or not, but it doesn't seem to be the case. And Xiaomi claims it can do 10 to 80% in 12 minutes. This is incredible. The price expected, okay, we got the price. SU7 is Xiaomi's second model after the SU7. We know that. Another serious competitor to Model Y comes from Volkswagen-based backed Xpeng. The G7 SUV will launch in the first week of July. Xpeng announced without specifying the date. So that's coming next week. The G7 started pre-orders on June 11 and received 10,000 reservations in 46 minutes. The pre-sale price was $32,500, but it is common for the Chinese automakers to lower the price upon launch. The Xpeng G7 is a mid to large SUV with these dimensions and a wheelbase of that. The Xpeng G7 is currently rear-wheel drive only and has a single electric motor that produces 218 kilowatts. It can be powered by 2 CLB-made LFP battery options. The CLTC range lies between 600 to 700 kilometers. Okay. Another competitor is Shanghai-based NIO. The company announced that the second car under its entry-level brand Onvo will launch early next month, Onvo L90. According to Li Jing, the launch will occur in the second week of July. So it's like week after week after week, there's a new vehicle coming into the China market. And again, even before these, Tesla Model Y doesn't make any money. Onvo L90 is a large SUV with 6 or 7 seats, and they kind of like have slight differences from each other. So if you want a 6-7 seater, you go with this one. Maybe you don't go with the Xpeng one. But I think the Xiaomi one is the overall best value. Onvo currently sells a single car with mid to large SUV L60, which launched in September last year. However, its sales were below expectations. According to original target, it was supposed to hit 20,000 monthly sales in March. In May, the company sold 6,281. Wow, that's a hell of a miss. Finally, in the third week of July, Li Auto's i8 all-electric SUV will launch in China. It will be the company's second electric car after Li Mega MPV, launched in March 2024. Focused on EREVs. We talked about EREVs, extended range EVs. The i8 will be all-wheel drive and have 2 e-motors with a combined power of 400 kilowatts. It will also feature 5C charging. 5C charging. So this is going to be also extremely fast charging. NMC battery from CATL. Yeah. All right. Anything else? Model Y starts. We have the price. Okay. Moving on to a bit of a Uber news. Uber Technology is in talk with founder Travis Kalanick to help fund his acquisition of the US arm of Chinese self-driving firm Pony AI. So there were some rumors about Travis joining Tesla potentially, blah, 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 which obviously was just hype and nonsense. Travis is looking to buy his own firm, Chinese self-driving firm Pony AI, according to New York Times. Shares of both companies jumped in Thursday trading. The talks are preliminary, according to the Times, citing 2 unnamed people. Kalanick would run Pony AI, the Delivery Incorporated subsidiary, if the deal is completed while continuing to lead his current company, Cloud Kitchens. The report cited as people saying. Financial details are not known. Any questions, comments, please leave it in the chat. A couple of company-specific news. Microsoft's in-house AI chip efforts face hurdles. Microsoft's latest AI chip, Braga, is facing a 6-month delay, pushing its mass production to 2026. This delay, attributed to design changes, staffing constraints, and high turnover, puts Microsoft chip at a disadvantage against NVIDIA's Blackwell chips, which are expected to be more powerful. The company's future roadmap for AI chips remain uncertain, with concerns about the timely launch of subsequent chips, including Maya 200 and Maya 300. I want to read the details on this. We can cut the Nike one short. Microsoft is taking much longer than expected to design its latest generation AI chip, the information reported. The delay is increasing the possibility that the new chips would be even less competitive with NVIDIA's by the time it gets to mass manufacturing. Microsoft's next AI chip, dubbed Braga, is facing a delay of at least 6 months. This is pushing out its mass production to 2026 from 2025, the report added, citing people familiar with the effort. When the chip gets into mass production next year, it is expected to fall well short of the performance of NVIDIA's new Blackwell chips, which were released in late 2024, the report noted. Microsoft wished to put Braga chip into its data centers this year, the report added, citing a senior Microsoft executive who worked on the chip team. Microsoft, okay, so it's delayed by about 6 months. All right, let's see. Microsoft did not immediately respond to a comment from Seeking Alpha. The deal has been attributed to unexpected changes to its design, staffing constraints, and high turnover. Microsoft is not the only tech giant making its own AI chips in an effort to reduce its reliance on NVIDIA. For example, Amazon is working on its third generation AI chip, Trainium 3, and the company has said it will be available to customers by the end of this year. So it looks like Google was ahead of everybody else in challenging NVIDIA. I mean, Google has done such a tremendous job with its TPUs. Amazon also kind of caught up in an effort to kind of decouple itself from NVIDIA as much as possible. And this Trainium chip seems to be very capable and much cheaper to Amazon than the alternative, which is buying NVIDIA chips. Microsoft is still lagging, but I think Microsoft will figure it out as well. And in 2026, they will ramp it to volume production. But let's see. So far, Google has done a great job. Amazon decoupled itself from NVIDIA, the dependency on NVIDIA. Microsoft hasn't done so yet. Amazon's spokesperson told the news outlet that the project is on track and the chip will provide twice the computing power of Trainium 2, the previous generation chip. Meanwhile, Alphabet has been developing its custom AI chip line called Tensor Processing Units, TPUs, for a long time. Google's next generation TPU, also known as Ironwood, is expected to see manufacturing in small quantities by the end of this year, with most of its mass production slated for next year, the report added. Google did not immediately respond. Google has faced another type of issue. Last year, Google started collaborating with Taiwan's MediaTek on the design of its next generation TPUs. However, the collaboration saw a setback as key people from the MediaTek team responsible for TPU's networking technology, a vital part of AI processing which allows multiple chips to work together in unison, left to join NVIDIA. Wow. The report noted, citing people familiar with the matter. NVIDIA CEO Jensen Huang earlier this month told reporters at an NVIDIA developer conference that many of the rival chip projects big tech companies are pursuing would be abandoned. What's the point of building an ASIC if it's not going to be better than the one you can buy? Well, cost. Huang said, using the industry term for the chip's application-specific integrated circuits. An NVIDIA spokesperson referred to these remarks when asked for comment about its customers' in-house chip efforts, according to the report. NVIDIA, in November 2023, Microsoft unveiled its Maya 100 chips aimed at AI workloads. At that time, the company said it will be available for Azure cloud customers, and it was being tested with Bing and Office AI products. OpenAI, which is backed by billions of dollars in investment from Microsoft, is testing the Maya 100. The information report said that Microsoft has mainly relied on Maya 100 for internal testing rather than the real-world usage. The chip is not powering any of its AI service, as per several current and former Microsoft employees. This largely because it was originally designed in 2019 before OpenAI released ChatGPT and was meant for image processing rather than generative AI. The report added, citing a person involved in the project. After the release of Maya 100 in 2024, Microsoft launched a strategy to build 3 successive chips, dubbed Braga, Braga R, and Clea, with plans to deploy them in its data centers 2025, 2026, and 2027, respectively, the report noted. However, Bruegger's delay to 2026 increases concerns that the company will be able to launch the remaining chips on time. Microsoft's future roadmap and timelines for AI chips have not been previously reported. The three chips are all meant for inference, the process for applying a trained model to new information to get responses or make decisions, according to the report. Microsoft had planned to design a chip for training AI models, but canceled the effort in early 2024, the report added. Midway through Braga's development, which is expected to be introduced publicly as Maya 200. Interesting. Microsoft asked for design changes to include new features requested by OpenAI, the report added. That made the chip unstable when run through simulations and set the project back several months as engineers worked out bugs. Despite significant changes to Braga's design, Microsoft executives did not move the deadline to complete the design of the chip by year end. The deadline created stress for such that around one-fifth of the people on some teams related to chips design left, the report added, citing current and former team members. Microsoft's AI chips would not come close to competing with those of NVIDIA's until at least Maya 300 dubbed Clea, which is based on a new chip design compared to Braga, the report noted. Until then, the performance of Maya chips relative to their high electricity costs will lag behind of that comparable chips from NVIDIA, the report added. All right. And the final from Nike. Nike plans to reduce reliance on China production for US market to soften tariff blow. Nike plans to reduce its reliance on China for US bound products to mitigate the impact of US tariffs. The company aims to decrease China's share of imported shoes from 16% to a high single digit percentage by May 2026. Nike also reported a 12% drop in fourth quarter sales, but beat analyst expectations with the running category returning to growth. Shares are up double digits today. On that note, any questions, comments? Let's do a quick update. The markets have slightly down a little bit since we started, but still very much up today. Pretty low volume day. Thank you very much, everybody. Enjoy your weekends, and I will chat with you all next time. Take care.